Hello everyone, welcome to my channel. Today we're going to be talking about finances and getting you to that next level. Today we're specifically going to talk about saving for your first home and what goes into it. If you are a first-time home buyer or first-generation home buyer, saving for a house is almost a mystery to you. I know it was a mystery for me, so I'm going to go over some tips, and we're going to go into a deep dive of some of the expenses that you need to prepare for. Because if you're anything like me, then you're saving blindly. And today we're going to give you a target. So we're going to break down closing costs specifically, how they arrive at the number that they get, and what your savings goal should look like depending on the price of your home. So come with me as we take a deep dive into closing costs and what goes into it. Okay, so in order for us to learn about closing costs, we're going to review my personal loan estimate for the home that I bought in 2020. We're going to review all the numbers and all of the details so you can better understand what I had to pay for, and this should give you an idea of what you should save for, so it no longer becomes a mystery like we talked about earlier. So the first thing we're going to look at is the sales price. This is the cost of my home. I bought it for $280,000. This is my loan type. I got an FHA loan. My loan term is 30 years, and my closing date is March 6, 2020 at 3 p.m. So this is the date that they issued the estimate. So let's scroll down and try to understand some of these numbers. This is my loan amount. So this is what the bank is lending me. As you can see, is lower than the home's price. We'll go over why that's the case later. This is my interest rate. At the time, this was, record low interest rates. They always say that on the news, but if you was to purchase a home now in 2021, your interest rate would be even lower, but housing prices have gone up. And depending on when you watch this video, your interest rate will vary. But your interest rate is going to correlate more to your credit more than anything. This is their monthly principal and interest. And as we scroll down, they're going to add more costs and fees for me to better understand what my monthly payment is going to be. And the estimate they arrived at is $1,763. And we got to that number by adding things like taxes and escrow and home insurance and HOA and property tax. But to reiterate, my monthly payment is $1,763 for all of these fees that they added together. Now, this is what I had due at closing. They add up all of my fees and what I had already paid, and they said I had $15,798 due at closing. Now, the next page is going to go into deeper detail of how they came to this number. So we're going to scroll down to page 2 so we can better understand what we're getting ourselves into. All right. So closing cost details. Closing cost detail is broken up into many sections, and we're going to go over each one so you understand what it is they're actually charging you for. So section A is called origination charges. Your origination charges or fee is the cost of them gathering the money, is probably the best way to explain it. They had to do work to secure the funds to loan you money, and they're going to charge you for that work. That work typically is 1% of the loan amount. So depending on what house you get is going to be the cost of your origination fee. Also in this section, they charge you for underwriting fees. Underwriting is a long process and an extensive background check to find out who you are, where you came from, how much money you make, and how long you made it, and how you made your money. This is probably the most extensive background check most normal people will go through in their life. And once they're done putting you through all of that pain and suffering, they're going to charge you for it. So that's how that works. Section B is called services you cannot shop for. What this means is the bank needs to provide certain services that you cannot get from anywhere else. They need to appraise your home. They need to run your credit. They need to pay taxes. They need to verify who you are. But the most important thing in this section is mortgage insurance premium. This also goes by another name called PMI. If you don't have 20% of your home's value as a down payment cash, then you're going to get PMI. And what PMI is it insures the mortgage itself. This is how the bank protects themselves from you. In the event that you default on your loan and you go through a foreclosure in the future, since they loaned you out so much money, they took out insurance on the risk that they have taken. And that insurance is called PMI, and they charge you for it. The best way to get out of this is to either A, bring 20% of the home's value as a down payment, or B, get a VA loan. It's one of the good benefits of being a veteran. The total cost of services you cannot shop for came up to $5,592. But the biggest contributor to that cost is PMI. So remember that. So we're going to scroll down to section C, and this is called services you can shop for. This is the legal fees that is associated with buying a home. They're going to charge you for examining the title, making sure it's legit, the attorney that they hired, all kinds of things. And the reason why they say you can shop for them is if you have your own attorney, if you are in the business of buying and flipping houses or things of that nature, you're probably going to have your own attorney on your payroll and you would use him. But for us regular people, we're going to use the attorney that they recommended. Most lenders are going to recommend their own attorney, and they're going to pretty much fast track the entire process as it relates to closing, because you have a certain amount of time to gather all of your funds and meet them on the date of your closing. All of these services came up to around $2,300, and the total cost of everything in section D is $11,567. I want you to understand this number as the cost of doing business. Nothing in this world is free. All of these people had to work in order to get you the money that you needed, and they charged you for it. And in my case, the total cost came up to $11,567. This alone could be called closing cost. This is the surprise expense that you should be expecting. And the best way to mitigate that is to change your loan type or have 20% and have your own attorney on payroll. Now, but we're not finished yet. The next thing we're going to go over are the other costs. These are taxes in section E, prepaid in section F, and initial escrow payment in section G. Now, these aren't too complicated. So I'll just quickly go over them. Section E is taxes. We all have to pay taxes. Depending on your area, this number may fluctuate wildly. For me, it came up to $1,100. Your prepaid is primarily your home insurance premium. You need to insure your home before you move into it, just like you have to insure your car before you drive off the lot. And home insurance is an annual premium. All of us have to pay our home insurance once a year at a certain date, and it insures the house for the year that's coming up. It's prepaid. And then initial escrow payment. Your escrow is an account that manages your taxes, your mortgage insurance, which is PMI, and your home insurance. Out of this account for the entire duration of your loan is how you pay these bills. And this initial escrow payment is just paying your first months of bills, and that's due at closing. Section 8 is other. This is going to change wildly depending on where you bought your house. My HOA is $350 a year, which I think is pretty good. But I know in some places in South Florida, people pay $350 a month. So due at closing is typically the entire annual cost of your HOA. Now your total cost of these other costs comes up to $4,732. Just like this is the cost of doing business, you should consider this as your bills. Your taxes are bills, your insurance is bills, your escrow payment is bills. And now the final portion of this is calculating cash to close. This is going to hone in how much you need to actually save for your closing cost. So adding up everything that we talked about was $16,000 and let's say $300. But nowhere in this sheet did we go over the down payment. And that's because this is in addition to your down payment. So right here, they're going to talk about the down payment, which is these two prices right here. In order for me to purchase my home, I had to put in a deposit. This allowed the seller to put me under contract and hold the home for me. This deposit is not free money for the seller. This deposit comes out of my total down payment that we needed to buy the home. So I gave the deposit, a $3,000 deposit to hold the home, and then I owe the rest of my down payment due at closing. Right here is the seller's credit, excuse me. And this is important. This is something that my agent negotiated, and is almost the secret sauce to getting into a home. Instead of negotiating the price down too much, my agent decided to ask the seller, how about you pay 1% of the closing costs for my client? So typically people will negotiate maybe $5,000 or $10,000 below the home value. And that might rub the seller the wrong way. He might not sell the house to you. But if you negotiate paying 1% of closing, most sellers will agree to that because it's cheaper than lowering the overall price. And it will help you reach your savings goal faster, because it's a lot harder to save $3,000 more in 1 month than to pay $5,000 over 10 years. So all of things add up to estimated cash to close to $15,798, as we saw on the first page. So I hope this gives you a better idea of what you should save for. In a nutshell, in order for me to move into my $280,000 house, I needed about $20,000 saved up. So this should give you more of an idea of your saving strategy and savings goal. So we've gone over the loan estimate in detail. We've covered all the sections. And now you guys have a better idea of what to expect when you're buying your first home. The prices that can change or vary the most is going to be the origination fee, which is based on your home's value, your taxes, which of course every area is taxed differently, and your PMI. Different banks charge different PMIs. So some banks may be offering you what you think is a good deal, but they'll be getting all that money back with a high PMI premium at closing. Another thing I want you guys to focus on is the seller's credit at the end. I'm not sure too many people are negotiating that in their closing, but rather than trying to get the seller to lower the home's price by $10,000 or $20,000, over 30 years, you're probably not even going to notice a price difference like that. But having them pay 1% or even 2% of your closing costs can really give you that edge to get you into your first home. And most sellers are willing to do it simply because it's cheaper than lowering the overall cost of the home. So do what you can, focus on your saving. And one of the best ways to building wealth and equity is real estate. All of us have to pay rent and pay for our housing in some form. You might as well be building your equity while you're paying for yourself to live. And one of the best ways to get yourself to that next level financially is to own a home. So good luck. Thank you for watching my video, and please look forward to more financial content.